All right, so tonight's lesson is the second lesson in a series of many on the fundamentals of behavioral analysis with your trading, or emotional and psychological analysis. Tonight's lesson focuses on bias. In last week's lesson, if you weren't able to catch it, the recording is found in Academy resources. But one of our highlights from last week's lesson was that who you are as a trader is just like who you are as a person, only amplified. So when you see traits in your trading, these are traits that are underlying in you as a person, right? So by analyzing where we're at with our characteristics and our behavior, we can help to improve and grow, not just as traders, but also as people. So last week's homework or follow-up session, because I can't give homework, so I'll just call them growth tasks, were to look at our wellness wheel that shows our 7 dimensions of wellness. And we wanted to focus and start implementing behaviors that help us to become a more balanced individual. So we had the emotional area of wellness, physical, intellectual, spiritual, environmental, social, and financial. So from last week, I had asked everybody to pick one area to acknowledge your successes or acknowledge an area that you're already strong in, as well as picking one area to focus on improving this week. You can drop in chat which one you improved on, or if you have been focusing on any one in particular. Now's your time to get some pats on the backs or some bragging rights. I had some people who sent me some pictures of their desk space. I called some people out on that last week. I love to see their clean desks. Like any before and afters when it comes to cleanliness is a thing for me. I had some people tell me they stopped drinking. That was really incredible. Some people who said they were working out. Some people who actually took a break from trading, like took a day to actually sleep. Sometimes it's the bare minimum. Nobody's speaking up. Nobody's speaking up. Well, here, so if you didn't follow through on this item from last week, if you didn't set a goal for yourself, or if you didn't do anything for yourself last week, you need to ask yourself why not. Because these can be self-sabotaging behaviors, not just in your trading aspects, but in your personal aspects. Because if you didn't follow through, you need to spend some time in your trading journal asking yourself why not. Why can't I do one thing for myself? Call up a friend I haven't talked to, try to establish a bedtime, eat a vegetable, right? Because the truth is that what's holding you back is you. You're the only person who's going to be in charge and accountable for yourself. Unfortunately, that's the true reality of it. You can have coaches, you can have mentors, you can have academy sessions, you can have family, friends, you can have a partner that you're striving to do things for, but unless you want to do it yourself, you're not going to stick to it. So you gotta channel your Snoop Dogg. I put Snoop on this first one because I need you to think like sorry, somebody's got a hot mic. Ooh. AJ Gibson, my dolphin baby. I just had to mute you. If you need to speak up or anything, unmute yourself though. Oh, I love to see in the chat. Okay, hold on. Now that I'm calling some people out, people are saying they did some things awesome. Working on the spiritual aspect. That's really good. We were supposed to start drinking. I spent some time in my environment. Cleaned up. I did. Yep. Cleaned up the desk. I love to see it. Eat a vegetable. Hey, somebody's got to tell you. Look, food. You need to. This is rest in peace, Kobe. But Kobe used to say to his teammates, like, "What are you fueling with, man?" And they'd be like, "What?" And he's like, "I saw you drinking some Mountain Dews. Is that your fuel?" You know, like if once you start to change your view of food as medicine or fuel because it has nutrients, it's kind of life changing. So yeah, eat a vegetable. If Jordan Peterson is gonna walk around and tell people clean your damn room, Amy's gonna walk up in here and Mizzle's gonna be like, eat a vegetable. Okay, cool. So for those of you who did something for yourself last week, I'm very proud of you. What I'm going to ask you to do next week is set a new goal. I want you to pick a new realm of the 7 dimensions of wellness, something other than the one you were good at the first week and the one you worked on last week, because our goal is to be balanced. We want to have something going for us in any area, because if something falls through in one area, we need those other parts of our life to pick up the slack. So identify which one it is that you're going to work on for next week. And if you didn't get to anything last week, you're going to have to pick 2. and you got to pick up your slack. This is like school, this is like grades. You're going to have to come in here and get yourself some extra credit. Learning to manage finances and learn trading. Beautiful. I love that. Devoting time to yourself and your education is important. I love to see it. Plus you're in here, which shows me that you're really doing it. So I love to see that. All right, cool. Being more social, it's so important. Remember that humans are social beings. For as introverted as people may be, especially people like me, I really like time alone to recharge my batteries. It's important to remember that we're a tribal species by nature, right? Okay, so you got to channel your inner Snoop Dogg. I want to thank me for doing all this hard work. I want to thank me for putting in the time. I want to thank me because at the end of the day, that's all you. So set a new goal, write it down, because we know that we're more likely to achieve our goals when we write them down. And we're going to repeat this every single week. When I give you lessons, when we go through things like this, we're only going to be building. I want you to just identify one area to work towards. Explaining how to make a good trading journal and the psychological benefits of it. Absolutely. We can talk about that more in depth in the future. I'll give some examples as well too in Academy chat later. All right. So you answering in chat what it was that you were successful in your wellness from last week. That was the only props on the back you're going to get from me tonight. Got to channel my inner T-Swift. Old Amos can't come to the phone right now. Oh, because she's dead. Because we're going to be working tonight. The stuff we're going to be taking a look at tonight is our biases, our emotional and psychological or cognitive biases. This is not kumbaya. This is trading, and we're here to improve. So if you're serious, I want you to start taking your growth seriously, because if you don't take yourself seriously in this life, nobody else will, period. All right. So let's get into it. Where are we at in our learning process? We're in the diagnostics phase. All right. We did lesson 1, which was the overview and the fundamentals. Now we're on lesson 2, which is where we're going to be picking ourselves apart and collecting the data on ourselves, what biases impact us as a person and as a trader. So when we're going through this diagnostic, it's like lifting up the hood of a car. We want to go through, we can't fix problems if we don't identify them first. So what I want you to focus on is, who do you want to be? What are your patterns? When and where are those patterns occurring? All right. Or when or where are you doing this? Is this just in trading? Is this elsewhere in your life? Because this is going to have some impact, right? And why are you doing what you do? We can't get to the why of things until we get to the who, what, when, where aspects as well. All right. What we're looking at is we're trying to identify these things, because that helps us get to the root cause of it. All right. These are just symptoms. These are not the root causes. What we do as a teacher, or what you do as a coach, is you first go through the diagnostic process, so then you can implement formative and summative assessments to help analyze your growth, prove your growth, and then set a goal for your growth, right? So diagnostics is like a pre-test. All right, that's the phase that we're at right now. And then you go into a formative stage in the classroom. This looks like a quiz, pop quizzes along the way, small checks for learning, and then summative, which is your tests or your exams at the end to prove or demonstrate your mastery or your learning. What this truly looks like is it's going to be more circular, right? Because we're going to complete that process for several things in our life, and then we're going to apply it to ourselves in our trading, and then we're going to repeat. Because if you want to be truly in a growing phase, you want to make sure that you are constantly trying to improve. There's no light at the end of the tunnel. There's no, I'm all good now, I'm the best. You are always going to be tweaking and tweaking and tweaking and moving up, or else you aren't in a growing phase. I had put this image on here because this is something I go over with my mentees in one-on-one sessions. This is an example of the hero's journey, which is a common myth or trope in literature across the globe. This was brought up and designed by Joseph Campbell. So if you're interested, you can Google Joseph Campbell's hero's journey. But essentially, it says that somebody starts a task, and many stories follow this plot line, right? You can think of the big ones, Lord of the Rings, Star Wars, anything like that. You start a task because you have a call to adventure. This is when you want to start trading. Then you come over here and you meet mentors, right? And you have people who are trying to help you. You have some wins, you have some losses, you have some growth. Then you have some absolute hardships, transformative periods of your trading or of your life. And then you come to terms with that, of what it teaches you. You grow and you change from that like a phoenix, a death and rebirth phase. Then you come through and you have this strength about you now, and you return change to the beginning only to then begin the cycle again. So what we're looking at tonight and what we're doing in these lessons is we're embarking on our trading journey, right? And understanding all the emotional and psychological processes that come with it. And why are we doing this? We're doing this because, and our main purpose from our first lesson was, we need to understand, do you control your mind, or does your mind control you? Are you in control of your emotions, or are your emotions in control of you? So the purpose of anything I teach you or that we go over is to come down to this simple question that you can ask yourself before you enter any trading session. Am I in control of my mind? Or is my mind in control of me, right? Do I have control over my emotions? Or do my emotions have control over me? Questions in the chat before we get into our biases. All right, cool. Let's move on. So what is a bias? A bias is a prejudice in favor or against one thing. It can be an inclination to gear towards a certain temperament or an outlook. Biases can sometimes be personal and sometimes unreasonable in your judgment. If you have a bias, it usually means you have made up your mind about something before it has even happened, or you are anticipating things to play out in a certain way, either consciously or subconsciously. In tonight's lesson, we go over the heavy hitters that you'll encounter in your trading. But in order to understand biases as a whole, you should know that there are more than 175 conscious and unconscious biases that are out there that are labeled, explained, taught, and everything like that. So if you're interested in tonight's lesson, or if tonight's lesson is really powerful for you, you'll want to look up cognitive biases. All right. When I say conscious and unconscious, these are because there are some that we will be aware of, and there will be some that we don't even realize are happening, that are being driven by things underneath the surface. So more than 175 cognitive biases. I can name like 5 to 10. We're going to go through them, Stefan. Okay, so when do we apply biases in our trading? So some mentors or some people that you learn from will actually encourage traders to enter a session with a bias in mind. For example, they will encourage you to have a daily bias, aka deciding before you enter your trading session whether you are bullish or bearish on the day. There are some mentors that will encourage you to have biases towards the macro trends, like understanding where the high time frame price action is moving on the monthly, weekly, or daily scale, or even a higher time frame scale if you're looking at things that have a long establishment in history, like SPY or NS and EQ, which I know a lot of people here trade. Sometimes we have mentors who encourage trade plans that are fluid. For example, on the X-Trade side, JTW will come out and say and give a SPY plan, and he will say at these levels we're bullish, at these levels we're bearish, if this then that. We have the same thing here with our analysts in CT, where we come through with I'm watching SOL, here's the key level. If it acts as a resistance, then I'm bearish. If it blows through and flips into a support, we're bullish, right? So when we think about those kinds of biases, that's not really a cognitive or an emotional bias. What that is it's asking you to establish the direction or the decision before you enter the trading session in order to remove the emotional aspect. Okay. People can also have biases in their trading based on current, geopolitical events or economic events. And that's something that's really big in our trading right now as well. So without getting into any of that, it's important for us to realize and understand that that all of these outlooks, all of this stuff is noise that we aren't going to be dissecting today. What we're going to be looking at ourselves are, we're going under the hood into the psychological biases that we encounter in our trading. All right. When we come to any source that we may use to inform our trading when we're doing our own research or our own due diligence, it's hard to say if I asked you, where would you see bias? Because we would endlessly list places. Instead, I wanted to show you an example. Where don't we see bias? Bias is literally everywhere. It's in our servers, it's in Telegram groups, it's on Reddit, it's in news sources, right? There are some people who have built entire companies established on their biases, like Kathy Wood, who is targeting quote unquote disruptive innovation. I know she just like changed it in the last week, but she's establishing her entire concept on a bias. We have many big names like Peter Schiff. We know he has opinions on Bitcoin. If you go on Twitter, many traders will have established opinions and biases towards many assets. Warren Buffett, for example, has an extreme bias for Coca-Cola. The man is a diehard ride or die for Coca-Cola. All right. So he's biased in that nature. He also is very biased against Bitcoin, and him and Bank of America and Berkshire Hathaway and everything own infrastructure now for cryptocurrency stuff. So if you go on YouTube, any of your YouTubers will try to exploit your biases, right? Or even implement biases into your thinking to align with theirs. So you'll see biases everywhere, but none of this stuff is within your control. What matters is your bias. What matters is your decisions. What matters is understanding how your brain works, understanding your opinions, understanding your trade plan, and that we're looking for that overlap of things that are within your control and things that matter, because Twitter and what, MarketWatch and Benzinga or YouTube or freaking Superstonk, Reddit cryptocurrency subthreads, what any of that says about anything is outside of your control. So what you should focus on, not just in your trading, but also in your life, is that overlapping area of the things you can control and the things that matter to you. All right. If you put effort here instead of in there, right? Instead of worrying about your own stuff, cleaning up your own side of the street, instead of things that are outside of your control, you'll be very successful. So the activity tonight, if you want to get the most out of this lesson, and you've already taken the time to join the session, so I feel hopeful that you will do this, is grab your trading journal or open your notes app. If you have dual monitors, open up, a Google Doc on the other side. If you're on your phone, have a notes app open, wherever you want to take some notes tonight, because I'm going to introduce each bias one by one and give some examples. If you find that bias that I'm describing or talking about applies to you, or you've experienced it in your trading, I want you to write down the name of the bias. All right. Ideally, we want this in a list format. Then for the next week or for the next forever of your trading, however long you want to implement this, I want you to put a tally mark next to that bias when you experience it. Because ultimately, what we need to do for diagnostics is to gather the data on our trading. So when you are putting down your tally next to each bias, you'll be able to then rank your biases that affect you the most. So then you can put interventions in place to help understand which ones are subconsciously driving the majority of your trading, okay? Even if when you're in the week, you can't remember the name of the bias, go through and if you're identify your emotions, like we learned from last week's lesson, and feeling like I'm feeling scared that I'm going to miss out. And then you can Google the names of the biases and identify which one of those biases is what you're feeling. I think you'll be able to get it for the most part, but get something to write with and get ready. And I'm going to pause and ask for any questions before we get into it. All right, sweet. Let's go. All right, so first one, numero uno, is the self-control bias. The self-control bias is the tendency to gear towards instant gratification in the short term instead of doing the action that would best suit your long-term goals. When Stanford University did the marshmallow experiment, this is brought up a lot in trading and about saving and finances. What it is essentially they put a marshmallow in front of a child and they said, hey, you can have this marshmallow right now, or if you can wait 5 or 10 minutes, I'll come back and I'll give you 2 marshmallows. And so you need to ask yourself, am I the kind of person who's accepting a marshmallow because it's right in front of me, or am I willing to wait for those extra rewards down the road or the extra marshmallow? If you're somebody who's trying to lose weight, you might be thinking, wow, I really want a Steak and Shake milkshake in this moment because I'm just obsessed with them right now. But you know that it would be better to go home and eat some vegetables, right? But you're doing what feels good in the moment and seeking the instant gratification instead of doing what's going to help you in the long term. That's an example of self-control bias, all right? What you can see this in how you can see this in your trading is sometimes if you are looking at, if you're experiencing a loss, right? and losses are happening because you're thinking of you want this money soon in your trading, you have a goal and you want to achieve it faster, and things aren't going the way you want, so you start putting more money on there and start taking more risk to compensate for your losses. You could also have a skewed time preference on a chart that you're looking at, where let's say that you think you're doing a swing trade, or your goal was to do a swing trade, but really you're looking at the 5 or 10 minute or 15-minute charts, where you're experiencing some impatience in your trade, but then you're focusing on the wrong things because you're looking at the trees instead of the forest. So if you have a tendency to gear towards, I want it right now, let me YOLO in now, I'm not going to wait for my entry, I want the marshmallow now. If you just feel like you're like a now person, I want you to write down self-control bias on your list. So if you have a self-control bias, what do? All right. Number one, have realistic assumptions of what you can accomplish. Identify other areas of your life that is impacted by this bias and address it. Or, I told you I was going to be harsh, I was going to keep it real with you. Coach Tough Love in the house tonight. Go back to savings. If you think like you have $500 to spend and you are 20xing, $150, $250, $300 positions, or even full port positions, because you want to double that money right now, take a step back. Go back to savings and budgeting to rationalize your spending before returning to investing, right? Investing is disposable income. This should be money you should be okay to light on fire, and you should understand that nothing is going to be handed to you today. Don't seek that one marshmallow. Be realistic and go for the 2 marshmallows. Next, confirmation bias. You'll also hear this referred to as the truth bias. This is one of the strongest biases that you can experience or see in a server, for example. Confirmation bias is seeking evidence that confirms your beliefs and ignores the information that contradicts it. So on the right-hand side, you'll see a visual, and somebody will present a lot of facts and evidence, and you will extrapolate the portion of that evidence that aligns with your opinions or your beliefs while ignoring other opinions or beliefs. So what you're doing is you're actively seeking out reasons to tell yourself why you're right and ignoring other reasons of why you could be wrong. So if you are experiencing confirmation bias, add this to your list. All right. What it can look like, if you're bullish in a position, you might only be focusing on bullish candles or bullish price action instead of price action as a whole. If you're in a certain position or in a certain perspective, you might only be following analysts that are on your side. And when you go to search for your ticker in the server, you will ignore liver and onions, ignore time hawk, ignore mellow, ignore and oh, Amy said it, so there's somebody who aligns with me, so I have an analyst with me, right? But you ignored 3 other analysts. So what can you do? First of all, remove the server stuff. Look at the chart. Identify the price action that will invalidate your hypothesis. This is where you can place your stop loss. This is the part that tells you your trade thesis was wrong. All right, here's an exit point, right? Or look for reasons against taking the trade instead of for it. That way, when you're going into your trading plan, you know that I have observed all of the information I can on this, and this is the way I'm deciding to go. Done. Next bias, loss aversion bias. Right? This is the tendency to focus on not losing instead of focus on winning, right? The psychology behind this one is huge, huge. The science shows us that the pain of loss is far greater than the pleasure of a gain. So when we actively have good things going for us, we sort of take them for granted. You have a don't know what you got till it's gone sort of a mentality, and then when you lose that thing that was giving you these small gains, it just feels so incredibly painful, right? So if you're focusing on losing instead of focusing on winning, you have a loss aversion bias. How this can show up in your trading is you might have things like stops that are too tight because you're so afraid of losing versus feeling curious about where your trade can go and having that gain, right? It could look like portfolios that are too conservative or positions that are too small. Maybe you think like it's safe for me to go in with 1% of my account, but because your account has grown and you aren't adjusting for that 1% position size, you might be hitting a banger of a trade, but you couldn't even really capitalize on the move because you were being a little too stingy, right? Another one is there's a common phrase in trading. It's cutting the flowers and watering the weeds, which means that you're cutting your winners too early. There are really good traders whom have excellent setups. They have identified their entries. And one of their biggest faults, and the reason why they were never as profitable as they could be, is because they cut their winners too early. If you have a loss bias, you are like 25% is good enough, I'll take it. But what you need to understand is that when you have a setup, you have to identify your risk to reward ratio. And if you're cutting your winners too early, you're actually messing up your risk to reward ratio. So let's say I have a trade that I set up as a 1-to-4, a 1-to-4 R&R, and I have that out and I'm feeling really good about it. And then it starts going into my green zone and it's like made half the move I'm expecting it to. And I'm like, you know what? I'm going to be good enough with that one. Green is green, but you're doing this all the time, right? Then you have a loss aversion bias because you didn't really, if you cash out all then fully close your position, you messed with your risk to reward ratio. That trade you took isn't really a 1-to-4 trade. It's a 1-to-2, which is a coin flip now. So what you think you're doing that's helping you is what's going to happen in the long term is you're going to be sacrificing growth. So you need to understand that losses are the cost of doing business. All right, if you're going to trade, you're going to lose, period. It happens. It's just a choice of how much will you lose. And the short-term feeling of protection that you might be feeling, you're right. You're protecting your money. But if you're a person who is chronically cheap, if you are chronically closing your positions before they have had the opportunity to move and fully complete the trade, then you are sacrificing growth in the long term. So you're actually harming yourself, right? My trick for this one, use that long and short position tool on TradingView to visually see your risk to reward, to remind yourself why you set up the play and why you went with the probabilities of it. Your next step as a coach, I'll give you a hint. Instead of fully closing your position, we want to leave runners, right? Just shave off a little bit. What this does is this satisfies your loss aversion, but it maintains the trade open. So you're de-risking as you go, but you are still you're weaning yourself into the habits of a winner by doing that. This is definitely one that I struggled with. You know, I'm seeing a lot of people in chat. I remember when I first started trading, loss aversion is actually pain. It is, you feel physical pain. The biases that we're going over and everything in our lesson are emotional concepts, but emotions are tied to your physiology in your body. So you physically feel it, especially since it's a mental game. You have the anguish that you experience from trading is so much more than any euphoria that you'll experience. This one seems pretty apt for me. I'm new to trading, can relate to all of these. If you are keeping a list and you are 3 for 3 right now and your biases, don't feel bad. Don't feel bad. There will be some that just don't apply to you. And there will be some that, this is why it's important to keep the list, because you're going to tally. Because you might think of yourself as, I'm confirmation bias heavy. I'm always looking for other people, but you might be better at that than you realize, right? Or similarly, you might be like, no, I don't have a problem with letting my winners run. And then when you look back at your P&L, you're like, I'm really only pulling 15 to 20%. But I remember seeing in my trades, my setups, I didn't let them run, right? Let's keep it moving. Next one is the home bias or familiarity bias. This is the tendency to stick with what feels good to you, what feels comfortable to you, or what you know. Right? So if you first learned how to trade with Bitcoin only and you want to become a crypto trader, but you trade Bitcoin only, that's a familiarity bias. Another one is having personal emotions or attachments or loyalty to a company, like one you work for. That applies more on the equity side. So for crypto, I want you to think of like one that you believe in, because crypto as itself is a progressive field. And so let's look at XLM Stellar, for example. If you're like, this coin helps people who are impoverished, I'm really behind that. But the chart is just like, destructive and awful and no reason why you should trade this coin, but you're like, I just can't give up on Jed McCabe, man. This guy is just, I'm just here for him, I'm with it. Or with Doge and Elon, right? If you're loyal ride or die Elon stan and you're like, I gotta hold on for my guy, you have a home bias or a familiarity bias. If you have a concentrated ownership in any one coin or asset, this means your portfolio is unbalanced and you may have a home bias. This can look for in real life. This is like rooting for the home team, even if they suck, even if they have an awful record. You're just loyal to the brand. You're just loyal to your team forever and for always. So when I give some examples of real life stuff, it's to help you understand there may be some of this behavior elsewhere in your life. Okay. Home bias or familiarity bias, only buying US based equities because you see other countries as dangerous. How this really applies more to crypto is when we see sanctions in other countries and how that can impact us, like China's banning this, UK banned Binance, all those other things kind of have a ripple effect in our markets. So put eggs in other baskets. If you're a Doge fan, 90% of your portfolio is Doge, and Elon saw his portfolio for yourself, he wouldn't be like, attaboy, thanks for riding with me. He would be like, you should consider investing in other areas to have a more balanced portfolio. Like your loyalty at the end of the day for a company or for one thing, it doesn't matter. All right. You have to protect yourself, do things to protect yourself and maintain balance. Self-control bias for me, I always ask, am I being patient? Being patient helps a lot with that one for sure. Patience is really important. It pays to be patient. Next one, regret aversion bias. You'll also hear this named as the status quo bias, or you can hear this referred to as herd behavior. This is a bias that has a tendency for people to have the fallacy of believing or feeling fearful that if you don't act now, you may never get this opportunity again. So you act impulsively to avoid regret. Or, as there's a flip side to every coin, the regret aversion bias can be refusing to make any decision because of the fear that the decision will turn out to be wrong and then may later lead to feelings of regret. Right? What this looks like, being unwilling to choose a side, so you don't act at all. There are times when people will remind you it's okay to sit on the sidelines, sit on your hands, chill, don't do anything at all, or hedge. But if you're not doing anything at all, remember, no decision is a decision. We've gone over that in our past lessons. This could also look like blindly following an analyst. And the reason why you continue to follow analysts instead of make your own trades is because if you feel like if it doesn't work out, then you're not to blame. You avoid the feeling of regret because you're outsourcing the responsibility of your position onto somebody else. Another side of that is you're blindly following the group because, oh, well, everybody in main chat seems to think that longing Luna right here is a bad idea. So I'm just going to short Luna because everybody else seems like they're going to short Luna. And then if it works out, that's good. But if it doesn't, everybody else is in the same boat as me. That's a regret aversion bias, right? Another thing is you can join chat and people will be like, oh, Bitcoin's pumping, something else, Giga Chad, right? And you come in and you FOMO and you long the resistance and possibly overexpose, slide the leverage bar a little too far, like, ooh, yeah, let's capitalize on this move. I don't want to miss the boat. That's a regret aversion bias. Next is even if an asset is at a buy the dip moment, you've had this chart, you've had this line on your chart, you had an alert set, it's here. You might feel afraid to buy too much in case you're wrong and it's not a good investment. Let's say that you set a weekly buy order for Bitcoin that just got hit. But in chat right now, sentiment is really bearish and they're like, don't knife catch, don't do whatever. You set this alert up a long time ago, right? But you're like, okay, I'll go in. I set this, I made this plan for myself. But instead of buying my planned 5K worth of it, I'm really only going to go in with like 2.5K because I might be wrong and I don't want to regret being wrong. That's regret aversion. This is a very complex bias. There's so many sides to this one that if this becomes your strong one, you'll have to identify which way it falls for you. Are you more of a FOMOer or are you more FOMOing on yourself because you don't trust yourself? Another way of it is you can be trying to pat yourself on the back if you're right. Like, I knew it would, while also avoiding big regrets if you're wrong. Like, I was wrong about that one, but it wasn't my fault because there were so many people alerting it. So blah, 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 blah. Regret aversion bias. So this is where I'm going to keep it really real with you. I promise I'm always going to keep it really, really with you. All right. So what can you do if you experience this one a lot? You can hedge. You should have 75% of your position with trend, 25% away with trend, and you can lean into this as a strategy for you instead of choosing one side. If you find like you're one of those people who's always on the fence about things, or if your main complaint is like, I don't know when to act, then there are strategies that actually accommodate your bias and can soothe your regret aversion. If you're in equities, you have option strategies that let you play both sides. If you're on the crypto side, you can do something, you can be buying your spot. Let's say it got down to that weekly buy the dip moment, you know, you can be buying your spot, but then you can go and leverage and do another position, or you can use multiple accounts and do the same asset opposite ways, right? But if you don't want to lean into this as your strategy and you need to conquer it and get over it because it's mostly a fear-based thing for you as a trader, if you're experiencing regret aversion, what you need to do is nut up, sack up, and pick a side. You need to accept that you'll be wrong sometimes, all right? Sometimes some trains are going to leave the station without you. What did we say last week in the last lesson? Buses come back around, entries for trades come back around every 7 or 8 minutes, right? So you don't want to jump in front of a moving train, right? Ride the boat down the river, catch the train while it moves up. And if you missed it, then do that. But you can never capitalize on those moves if you are afraid to put some skin in the game. So put on your big boy panties and be your own trader. Next. If anybody tells me, this is usually the part where people start telling me in chat, they're like, I feel called out. I'm 5 for 5 on whatever or anything like that. I promise. It's, these are the things to face for yourself. This is the diagnosis portion for you. If you genuinely want to be a better trader, remember what I said, this is not kumbaya, all right? You're going to diagnose yourself and then put some stuff in place to make yourself better. Overconfidence bias. This is the tendency to overestimate your abilities. It can lead to risky behavior or unsound decision. What it can look like is thinking that you're a good driver when really you have a bunch of tickets or accidents. If you think you're a good driver and you say something like that and you're around your friends and they laugh, or if you're going out for a road trip with the family and you're like, I want to drive, and they all start give you sort of the side eye, you might have an overconfidence bias. You might think you're a good driver. Nobody wants you driving, right? Another one is thinking that you're an expert investor or a really good trader, right? When you were more so just lucky. This is the majority of COVID investors because COVID brought with us this bull run where everybody started diamond hand YOLO. The stock market only goes up, stocks, crypto forever, Bitcoin to the moon. And because you got in and have been trading and you had luck with it, you made the mistake of feeling that you had skill. So this is an overconfidence bias. So what you can do if you have this is, first and foremost, is try not to discredit the advice of other people with more experience or your peers, your friends or family who are recognizing these behavioral things about you, right? If somebody says, I don't know, maybe think twice, right? And just understand their intentions are good. Right? They're just trying to mirror back to you some things they see. Something else you can do is you should take a look at your freaking P&L, man. Like actually look at it, dissect it, see how things have worked out for you. Because what our brain does is that our mind's playing tricks on me. Right? Sorry, I've been listening to the Ghetto Boys all day. So what this happens is you can see that you remember, oh, I remember this time I made 50K on Ethereum, man. Dude, I got in at 2. It went to 4 in like 2 weeks. I was such a good trader. And then when you look back, you're actually net negative on Ethereum, on all your trades on Ethereum. But you have a tendency to you can remember the good things sometimes. So actually go back at your P&L and take a seat, How I told you that part of trading is, it's like watching your tape with the coach, watching the game, the playback time, analyzing what you really honestly and truly did. This is the only thing that's going to get you your overconfidence bias, because if you never choose to look in the mirror, then you're just going to perpetuate a cycle of thinking you're better than you are, which is going to cost you a lot of money. What you can do too, instead of thinking of that P&L after the fact as a post-mortem, I want you to do what's called a pre-mortem, which is list all of the possible outcomes for your trade. This helps you understand, first of all, it prevents confirmation bias. Next, this helps you understand, anytime I enter a trade, there are the options of a profit. There's an option of a loss. There's an option of break even, but usually it falls on one of those sides, right? You can say, Oh, sorry, Mello just got the promotion. Way to go, fam. Way to go. Way to go. All right, so I'm gonna check the chat now too. Let's see. A COVID investor, I was up 120K 3 months ago and 35, 40K down now. I feel that. I feel you on that. That's a lot of people in here. And you know what's so traders can have that experience, and your P&L might not be a reflection of your skills as a trader, because as you're going through this trading journey, you are overcoming some of these biases and these experiences, and constantly, you know, like doing the tweak. Like we said at the very beginning of the session, we had our going back and applying and changing and applying and changing and applying and growing, right? I feel that. I'm sorry for your loss, genuinely. But good things about hitting bottoms, guys, is when you hit bottoms, the only way to go is up. Easy capital losses tax deductions. So you can only claim $3,000 losses on capital gains on your taxes. So what happens, guys, is if you lost 10K in crypto this year, you can claim that 3K, and then that 7K will roll over into the future years. But I know you were saying that facetiously, Kelvin, but don't think that like, man, I lost 25K in crypto, so I'll get a good tax refund this year. There's a cap on that. There's a cap on that, y'all. Diamond hand, you don't lose unless you sell. 100%. Whoo! Don't know, some people are going to be triggered by that. Humble yourself and be realistic and honest. Yes, the mirror is not nice. No, the mirror is not nice, but if you genuinely want to get to the other side, the evolution, it's the phoenix again, right? You can't rise from the ashes if you don't die first. The mirror is not nice, but it's the truth, and you deserve the truth, and other people in your life deserve the truth. The truth is the only thing that's going to help you grow. Or you can stay in a fantasy land and think you're a good crypto trader and keep hemorrhaging money for the rest of your life. 3,000 per year. Yep. I mean, I'm sure that this will change. I shouldn't say that. Perhaps it will change for my people in the States in the future, but 3,000 is the cap. 3K is the cap. Is a joke. I hope it changes. You shouldn't say that. You shouldn't say that a loss limit is a joke, because nobody's entitled to even be compensated for their losses for $0, right? You know, $1,000 a year, some people would say, is a joke. Huh? People are able to get a little consolation prize. You lost some money. You lost some money. You want to pay a little less on your taxes now to compensate for your poor decisions. You know, so it's a slippery slope on that one. Slippery slope on that one. When you think about how much money goes into crypto, yeah, for some people, $3,000 is a lot of money. But hey, there are also some people out here who are only trading in hundreds. You know, and 3,000 is a number they might not ever reach. Let's keep going. Next bias is the sunk cost bias, or the sunken cost fallacy. This is the tendency to follow through or hold positions because we have already invested time, effort, or money into researching that asset, or into whether or not the current costs outweigh the benefits, right? Sometimes the money that you put into it, you don't feel like it can be recovered, so you have no choice. So you've already spent the money in here. So you have to, like Donna said, here we go. DCA, diamond hand, you don't lose unless you sell, right? What else it can look like? Hodl, you know, I like this stock, or shilling it to everybody else. Like, I believe in Kadena, man. I believe in KDA, the white paper, you know, blah, blah, blah. You've got this sunken cost fallacy. And what it is it's because you've invested in something and you don't want to feel like you were wrong, right? Another way that you can see whether or not you've had this bias is perhaps you accumulated too much crypto towards where you thought bottoms were, and you're anticipating a bull run to come along and sort of save you, right? And so you have this mindset where you're like, okay, I have a full spread of assets, right? And you thought you kept buying the dip. It's the memes, and it's like bought the dip, the dip never ends. Okay, so if you experience the sunken cost fallacy, here's some things you can do. First, have stop losses, right? Because just because you spent a long time doing something doesn't mean that you have to keep doing it. This applies in real life too, guys. Just because you spent a long time making a mistake doesn't mean you have to keep making it. So if you bought SOL at 250, you accidentally bought the top and you were like, this thing is going to 1,000 in 3 or 4 years. I just know it. I put all of my retirement money in this asset because people told me it was the next Ethereum. So I've just got to hold it, and I can't recover that money. I can't take the L. So I'm just going to wait 2 or 3 years, and I'm just going to keep buying the dip. And, it's 80 or 70 now, and I'll just buy the dip. And I want you to tell yourself and ask yourself seriously, could the money or the equity that I have remaining in this position be used to gain more in the next 3 or 4 years rather than sitting here? Think long term about it, right? Think long term about it. If you're ready to wait those 3 or 4 years and you genuinely don't care, then spot is king, hodl and chill. All right. But especially with crypto, guys, remember that it's not a regulated security. There are no guarantees. If crypto was like banned tomorrow, would you be okay? You need to be thinking about that when you have your position sizes. Let go of personal attachments. Look at the facts, not the hearsay. All right. And be water about it. You need to have a strong cutoff game. Cutoff game has to be strong. You have to establish boundaries for yourself in life and in trading. And the truth is, winners quit fast, quit often, and quit without guilt. They move on to the next thing. You're not going to find the Warren Buffetts of the world sitting in a dying or losing asset. They just move their money. They just keep it moving. They just keep it moving. Where can this gain more, right? This one is accompanied by a lot of pain. Absolutely. Different biases are going to be accompanied by different levels of pain for different people, and they will be specific to who you are as a person. But this one is hard because you're subconsciously denying, your previous decisions. And so it feels like disrespect to the self. But what's most respectful of yourself is being able to forgive yourself for maybe decisions you made, like longing the resistance or buying the tops on things. Yeah, I learned one thing: never let a green trade turn red. Is and can be a good strategy. Yes. And so what can you do in that situation? Use a stop loss, especially in crypto where there's no wash cycle rules, guys. Just exit, accept your exit and re-enter when you want. For sure. I learned about oil futures in high school, and oh boy, pain. Oh, I feel you on that. This sucks. And then so I don't even want to. That one's a little triggery for me, Kelvin. Cut losses instantly is what I teach. No reason to hold once invalidation point is hit. You can always take the same trade if price comes back. Yep, exactly. Let's keep it moving. There's the endowment bias. This is a bias that has a tendency to ascribe more value to the things you own or use in your life or that you like because you see it as meaningful and special versus its market value, right? What it looks like. Apple fans. I want to use this example for people who prefer Apple over Android and Google and things, right? They think the iPhone is worth so much more than like a Google Pixel, or like the Apple, stock is the future versus other things like that. If you have a brand of anything that you prefer over the other, like you're like, man, Solana is so superior to Ethereum. Like the gas fees are so cheap, which they aren't really, obviously, anymore. You still can't evade those bad boys sometimes, but it's so much faster. I just believe in Solana and blah, blah, blah. And I like Solana, and I have a big portion of Solana in my port. So, but then it might be tanking, right? You're holding that stock from 250, 200, 150, and now it's at 70. And you're like, it's just worth more. It's going back up. I know it will. Hold on, and then I'll be a Solana millionaire next bull market. You guys just watch, right? So this happened with Tesla. People became, and Dogecoin, everybody pulls out the outline, the Dogecoin millionaire, right? What you think is that you have a perception that what happened in the past can be repeated, or you're anticipating that something that you like or hold a lot of will rise in value in the future because you're holding it. Crypto bear runs and bull runs are an example of this, because we tend to think that price will retrace back to its previous highs and things of that nature, which it has shown to happen in the past. But essentially, the truth is we don't have that much price history in crypto, and everything could go to the way of delisting if other things were to happen, right? But if you hold things, you're going to feel like if I had more Ethereum than Bitcoin and somebody asked me what you should invest in, if I had an endowment bias, I would likely say, oh, Ethereum is so much better than Bitcoin because I'm holding it, right? I've already told myself that it's meaningful because I love it. Stefan said Sia coin. Yes, I the or you know, like an Internet of Things, or like say you go to a conference and you see somebody talk about it in the conference and that has always stayed with you, and you bought a large portion of it because you met the people involved in the project, and then the project goes to shit, right? And then you hold it for a long time. So if you have an endowment bias, you have a tendency to personally attach to and see things as more valuable than they are in the long run. What can you do? Be open to new information about what you're holding. Also, set your PTs ahead of time. So when the technical congestion arises near that layer of resistance, you can sell the top. If you pulled a fib back in the day, I had shared an old Solana chart and it called that top of Sol. And did I sell at the top? No, because I'm like, don't I had an endowment bias. I was like, Sol is the next ETH. I've seen it. The fractals, they line up, you know, but I got rid of some, wish I had gotten rid of more. My dad had told me in March to sell Bitcoin. He said it topped out, you know, the cycle, March 2020 to 2021. And I was like, Bitcoin's at 60K. Don't talk to me. He says it's going 29K. And I was like, yeah, you're smoking, Dad. No. Trust TA if you have an endowment bias. All right, recency bias. This one is very popular. Recency bias is favoring recent events over historic ones, or placing too much emphasis on experiences that are freshest in your mind or memory, even if they are not the most relevant or reliable. An example can be placing too much emphasis or power on recent moves in price versus the macro trends or high time frame history. You might be making decisions based on recent events and expecting those events to continue in the future. For example, if there's a sell-off or a pullback, you might be thinking, you know, it's going down, I got to let go of it. And you aren't really zooming out to see the whole forest, getting a big perspective. When I say this, I mean looking at the forest instead of the trees. So go out higher time frame. Imagine in your mind's eye that you're flying up like an eagle, like you see the whole forest, you see the whole thing. Does this small move you're seeing really matter? That's happening in the recent place. Also, people can pump or things can pump, like loop ring. You know, loop ring became hot and people are like, it's hot now, it's moving up now, therefore it's going to move up so much more in the future. This is the reason why rug pulls on shitcoins work. Recency bias, right? It's the hot thing, everybody's talking about it. Loop ring is so hot right now, right? Recency bias. I hope you're keeping track of these, because this next one is real. Post-purchase rationalization, or buyer's Stockholm syndrome. After buying something, we tend to rationalize and prove that our purchase was right, especially if we paid too much for that thing, or particularly if we bought that thing when it was expensive. So let's say you bought the top on an asset. Let's say Luna. I don't want to use Luna. Let's do Bitcoin Cash. Let's say you are a diehard Bitcoin Cash person, and you're like, this thing, you know, it has the utility, it's got the price, but you bought it at a price and now it's trading $200 to $300 less than that price. If people come to you and talk to you about your investment, hey, are you still heavily invested in Bitcoin Cash? You would be able to, you might be using the post-purchase rationalization bias and being like, well, you know, in 3 or 4 years, it's going to be where I wanted it to go. But, you know, unfortunately, it's not where I want it to be right now. But if somebody came up to you in like, let's say you pay too much for a car and somebody comes up and says, hey man, nice car, that becomes a rationalization bias for you, because you're like, yeah, I know it's not really a good time to buy a car right now because all the prices are inflated, but you know, I wanted what I wanted. So oftentimes what people do is they put a lot of time or effort into researching and reviewing things, and it's that same investment that we were talking about previously. If we acknowledge that we feel like we did too much, then it's synonymous with us as agreeing or like feeling like we had a bad judgment call, which is hard to look at. So what can you do if you're a person who experiences this buyer's Stockholm syndrome, where you spent too much or you just overexposed a bit too much and now you're just rationalizing it to death? You need to realize that you should have already justified your trade before you entered, which means you should have had stop losses and take profits established, and you should exit your trade at one of 2 points, at your stop loss or your PT. So don't try to rationalize while you're in the trade. If you have your defined parameters in your risk management, then stick to them. Don't feel bad that you spent time investing in something, but it hasn't hit your stop loss yet. Feel like it's going to fail if it hasn't gotten there yet. You don't have to feel that way yet, right? But if you're a person who has kept moving that stop loss down, or you said mental stops, I don't use stop losses or whatever, I'm gonna hold forever because I just, this is my biggest bag, you might be experiencing post purchase rationalization bias. Okay, Stefan, recency bias affects day trading big time. I have to reset, forget about yesterday in the future for sure. Oh God. Yeah, just the day new rip, keeping it simple as a buy for sure. All right, attribution bias. This is the tendency to believe that a good company must also be a good stock, or a mediocre company is a bad stock, or falsely attributing behaviors of the company or the asset behind the thing as a character. I have an attribution bias for anything that Jed McCabe is involved in, because I had felt for the longest time like he was behind the Mt. Gox scandal, things like that. And so I attributed, if this guy's associated with any projects, I think that they're trash, right? So I falsely attributed the assets or the value of that asset in accordance to the people attached to it, things of that nature. What this can look like for you is maybe you're undermining the concept of overpriced and underpriced. Maybe you're ignoring some form of analysis, whether it's fundamental, technicals, or the fact that the price is just not justified, right? Maybe you're a supply of a coin, or like a burning of a coin, a halving, versus where price is at, other things like that. Just really, it's so inflated, it doesn't really justify it. You might ignore that. You might feel like the temporary run up or the moon or the expansion cycle is actually falsely long-term growth. What we have with attribution bias is we push it outside of ourselves. So if you're sitting in a meeting, everybody's supposed to be at work at your job at 9 a.m. You're sitting in a meeting at 9:05, and you see your coworker rolling up 9:10, 9:15, Starbucks in their hand, coming into the meeting. You're going to make character attributes to that person. You're like, wow, they're late. They're not to the meeting on time. They're late to work. Therefore, that person is lazy. But if the situations were reversed and you were late to work, let's say you were the one walking up at 9:10, 9:15, and your other coworkers were seeing you, you could have the perspective, you have an attribution bias, because you go, I hope people will realize that I'm late because I had my tire went flat, or I went to the Starbucks drive-through to surprise my co-teachers or something and bring them coffee, and it took a little longer than usual or something. So you're hoping that people will perceive you for your good attributes instead of doing what we do to other people, which is project the bad attributes. So if these things happen to you, I encourage you to attend Academy streams. Use quantitative models or mechanical rules for your trading to make final decisions. Remove the emotional, the personalization aspect from these assets, the people and the projects, and don't make assumptions. How to set the expectation from the trade, create trade plan, etc. I will share a trade plan with you in Academy chat after this, but tonight's topic is really more so on the bias, and so I will help. Send me a DM and I'll send you some materials, man. Okay, let me see here. We're getting close, so I got to kind of fly through this, y'all. So illusion of control bias. So this is the tendency to believe that you can control or at least influence outcomes when in fact you cannot. Remember our Venn diagram from the beginning of the lesson: things that matter, things within my control. So if you are a person who feels like you may have a little control issues, right? What this can look like is managing your portfolio yourself instead of using a wealth management firm, because you feel like if it's within my control, it will be better because I am better. All right. If you're going to buy a lottery ticket and they say, do you want random numbers or do you want to choose? You might be a person who's like, I'm going to choose, because when I have the option and the power of choice, I have more control over winning. I'm more likely to win, right? You might feel or think that when you have positive outcomes in a trade, that you had or like, let's say you enter a trade and it's going in the right direction, you may feel that you have an illusion of control because you feel like you are almost, it's not like you're making that price run up and follow and obey your trade plan, but you feel like you're more in control because you established a trade plan and now it's going in the direction that you thought it would. So you have this illusion that you are better than you are, but more so that you have the control of what's going to happen, instead of thinking about that pre-mortem of I could still lose, the trade could still go the other way, blah, 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 right? if you have early negative outcomes in a trade, let's say you establish a trade plan, you enter and you're immediately going red, you tend to feel like it's not because of you, like you don't have control over it. Like, why is it dumping? I didn't think it would be dumping, right? So what can you do? Branch out and trade different markets. What this can look like too is also feeling, okay, so only trading, and I missed this part, only trading certain markets because you have the illusion of more knowledge in a said market. This can be familiarity bias, like only trading Bitcoin and ETH, but maybe you only trade in a certain market because like you're like, I just do futures because I have this one technique that works in futures that I learned from ICT. And so I don't want to trade crypto or anything else because I'm not sure if it'll work. If it were, I only trade crypto because all my knowledge is in crypto and I don't really know other things, right? So challenge yourself if you feel like you have the illusion of control bias to branch out and trade different markets, because this will teach you that you do not have control and or what the things that you do have control over and things that you can't control, right? You can also take a break, step out from managing your report and doing all these individual things and outsource and chill and some index funds, some mutual funds, just a couple coins, just chill in spot instead of doing leverage. What you need to do is accept the market as uncertain, that your trade plan doesn't make you special, that even good plans can fail because ultimately you are not in control. There are some factors that will always be outside of your control. There's the hindsight bias. This one I mentioned in main chat today. The hindsight bias is the tendency to overestimate the ability to predict an outcome, which could not have been possibly predicted. So this is different than overconfidence bias or an illusion of control bias, because this is the one where there's certain language attached to it. So you'll know that you're using it or somebody else is using it. What this sounds like is, I knew that this would happen. I told you guys this would happen. I called the bottom and I told you guys to buy that dip. I called the top. I told you guys to sell. Like nobody could have predicted that this would have happened, but people will claim to, right? Analysts will say, I posted the chart, I showed you, right? So what this can look like is people will show those charts and maybe explain patterns that led to the bull market, especially in speculative asset classes. But then when the next market shift is occurring in the present time frame, those same people are quiet. You get the crickets in the background, right? Because they are either unable to identify in the moment, or they don't have the guts to put themselves forward and say, I think, I believe, I feel we are in a bear market. I feel we are in a bull market, right? What this happens is this can happen with just one trade too, not just like a macro trend. So people can say before they're like, I think Solana's gonna go up. And then after the fact, I knew Solana would go up. Right? It sounds kind of like a braggart. It sounds a little arrogant, but it's the linguistic change from I thought or maybe to I definitely knew. I knew 100%. So if you're a person who experiences hindsight bias, please keep a record of your trading activity or journal to review. You can take a slice of humble pie and sit the F down and don't be that guy. Or what you can do is, and this is really going to be the most beneficial approach, is if you do notice patterns, write out the descriptors that defined that event. Like, I saw a failure to achieve, I saw a swing at this level, I saw a fib retracement here, or this led to this. So write down those descriptors from that event and then apply them in the moment to determine. This is another case of sack up and put it out there. That way, when you can have genuine bragging rights of being like, I did tell people, here was my thesis, here were my charts, here's what happened. It's not a hindsight bias if you, if you predicted it, right? But if it's something that was totally unpredictable, like today's market moves with Biden when he talked, nobody can ever foresee, or like earnings in the stock market, nobody can foresee where that will happen. So try and identify your logic there by looking at the mechanics behind it. The optimism bias or the pessimism bias, two sides of the same coin. If you're naturally a happy person or naturally optimistic, you're going to experience the optimism bias more, and vice versa for pessimism bias. So this is the tendency to be unrealistic. This is also the tendency to know that bad things can and do happen, but that thing won't happen to you. Like somebody will say, oh, honey, I didn't realize you were so interested in the crypto market. And you're like, yeah, mom, I'm a freaking good investor in crypto, blah, blah, blah. And they're like, be careful. That's a really volatile market. You can lose a lot of money. And you'll be like, not me. That won't happen to me. That is a strong bias, sir. Sometimes a superiority complex because you have an unrealistically positive view of yourself and your future. You have an illusion of control bias and overconfidence bias, and you feel like if I go in crypto, I will make a lot of money because of those reasons. Your optimism bias is the umbrella there. You can have a tendency to think that you're the exception to the rule, that you don't have to do something that everyone is advised to do, like having a stop loss, because I can handle watching it mentally, right? I don't need it because it won't even go that way in the future. That's an optimism bias. Or if you have a pessimism bias, you can be like, well, it's never, going to happen to me. So it's the same thing, but think about the words that you're using in your head while you feel these things, right? So what should you do if this is you? Seek balance. Avoid overestimation or underestimation by just aiming for estimation. Both sides. Your pre-mortem of a trade. How can it play out? Follow the same structure or trade plan every single time. This is what Bhupendra, who was requesting a trade plan, this is why I'm going to post that in a chat for you. Because if you're using that same structure and trade plan every single time, and you're calling it out and you're having this opinion and you're forming what it is, then you're good, right? That's eliminating the bias. Reduce your tendency to individualize. Yes, you're special, but norms exist for a reason. This is how patterns are formed because it happens to a bunch of people, right? So chill out with thinking you're too special. All right, I'm going to fly through the end bits of this. What the truth is when it comes to bias, guys, is that we don't see things as they are. We see things as we are, and our biases control our trading here. So how do you get rid of your biases? You don't. You don't. It's not always possible. And sometimes it's not even necessary. Remember, I shared some biases with you that where you're actually leaning into a strategy because of your bias. All right. So what you have to do now is just become aware of them and follow the same process that we do with our emotional work. So your step one is identification. So if you're doing this lesson to the best of your abilities, you are listing out your biases, what you've done tonight, right? Next is management. We're going to be using our data, figure out which ones mess with us the most and managing them. And then we can get ahead of them. All right. From your data collection, you can put interventions in place if even necessary. All right. The main strategy here that I would encourage some of you to use if you are not a self-aware person is to use your peers as mirrors. If you have somebody that you're close enough with or you're cool with in the Discord, or you can DM me or another analyst. We're always happy to help you. Top traders, contributors, etc. Don't get defensive. Be open and receptive to making an equal exchange, right? Of having somebody hold you accountable and be that mirror for somebody. So then you ask me, okay, Amy, how do I tell other people that they're biased? You don't. You don't. A man convinced against his will is of the same opinion still. All right. So you don't tell other people business about themselves. All right. If there is no reciprocity in whatever relationship you're thinking about telling somebody, if you want to tell somebody about themselves, but you don't have a relationship with that person, you don't know them like that, it's one-sided. It is 100% waste of your energy. If you do have mutual trust and respect and a fair relationship with somebody, guess what? You still can't tell them. You can't tell other people about themselves because people don't learn this way. If you really care about them and you have an open line of communication, what you can do are ask questions instead of making statements. You can say, have you considered whether there may be any biases impacting your decisions? Or you can say, how often do you find yourself, a friend slides in your DMs and it's like, bro, should I sell? Should I sell? Should I sell? Should I sell? Should I FOMO in? Are you getting in on this? It's going to the moon. You can say, how often do you find yourself DMing other people and asking what you should do? Instead of saying, bro, you have some serious bias issues, right? Sometimes you can't formulate or ask the question. So giving an observational, non-emotional statement can help. You can say, I've noticed your trades are frequently blank. I've noticed you're frequently trading without stop losses after somebody comes into your DMs or is talking about how much they lost in chat. They blew up an account, right? You can be the mirror for your peer. What you want to do is you want to avoid the you first statements. You don't want to say, you never use stop losses. You're always bearish. When you say you to somebody, you are, you put them on the defensive. All you can say is I feel, I think. And then you're speaking from your truth and what the other person does. Is that with that is up to you. Why? Because perception is reality. Your perception is your reality. The other person's perception is their reality. There's that old phrase, there's your story, my story, and then the truth, right? The fact of the matter is that your perception of the world around you is not necessarily the same as what is actually occurring. This is a bias in and of itself because it's not the truth, but it is your truth and your experience, right? Because your thoughts create your reality. And so while you don't have power over how other people see things, you do have power for yourself over your experience, and you have control over your thoughts. Your thoughts become your perception, and your perception becomes your reality. So the other thing to understand is that there's something in here called the law of mirroring. This is a universal law, and what it says is that what I see in others is a reflection of what I see in myself. Sometimes that's a good thing, sometimes that's not a good thing. So if you're constantly seeing other people doing things that annoy you, that is an opportunity for you to ask myself, am I doing that same behavior, right? Or if you see good things in people, you're like, man, people have just been so generous to me lately. I've had random Venmos from people sending me lunch money. I've had people, somebody sent me a plant for Valentine's Day. I got a free Starbucks coffee because somebody ahead of me bought one. That was so nice. That's a reflection to you of a trait of generosity that you've been exhibiting. It's now coming back to you. So it all stems from your thoughts and your actions, right? So here's what you do to prevent your biases moving forward. Remove all the emotion from this aspect. I want you to backwards plan, all right? Define your long-term and short-term goals in quantitative and not qualitative terms. So remove the I want to get rich, when Lambo, I want to be able to work for myself. Remove that and put actual numbers to it. For example, I want to increase my net worth by 15% by the end of the year, right? Next, decide what amount of money you want to have in your retirement. Put a number to the end goal and then backwards plan that. When do you want to retire? Calculate the difference, reconcile with your risk tolerance. If you're somebody who is high risk and young, that's cool because you have time to recover your money. If you are low risk, don't get into some shit that's more volatile, right? Be okay with doing things the slow way. Slow and steady wins the race, right? So some things for you to do, your growth tasks. I'm not calling it homework, growth tasks. I want you to think what is being reflected back to you through others. So what I talked about with the law of mirroring. Also your P&L. When you analyze your P&L, if you look at that, look through that. Next, try to identify which biases are most frequently in your trading by recording the occurrences in your trading journal or wherever you have been writing down your list from this lesson. And last but not least, I want you to pick a new area of wellness to devote yourself to or continue in your chosen area. Go for balance and even distribution. We're always seeking balance. So as a reminder, those areas are social, physical, emotional, career, or your life purpose, intellectual, environmental, or spiritual. Any questions? Any questions? Any questions? Bueller. We want our biases. Remember, you want to be able to be Snoop. I want to thank me. You're not doing this to make Amy happy. You're not doing this to make Academy coaches happy. You're not doing this to prove something to other people. You're doing this for you. All right, y'all, then I got to bounce. I'm going to go over to X-Rates and be doing some live analysis. So you're welcome to join me there if you'd like. I'm available for mentorship. You send me a DM. Thank you to everybody who came out, showed up, showed love. I appreciate everyone who is doing the things in here. I know there's some serious lurkers in here, some people who are shy, some people who talk to me in DMs but don't want to pipe up in the lessons. That's cool with me. What is more important to me is that you're following through for yourself, right? Good luck to everybody who is analyzing your biases. Be kind to yourself, please. Be realistic with yourself, please. Take yourself seriously or nobody else will. Have a wonderful evening.